You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 22nd day of June, 2017. Got a holiday coming up, not next week, but the following week. July 4th falls on a Tuesday. So I'm thinking we're going to see the markets. I guess they'll be open Monday. But, well, need I say more? I think the writing's on the wall for that week. But we do have next week. We got the remainder of this week. So, anyway, happy Thursday. So glad you're here. Thanks for joining us. If you are returning, welcome back. If you're here for the first time, a special welcome to you. I do have a chart up of the S&P 500 Emini Futures. You can go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone. Follow the instructions. 30 seconds, you'll be looking at the chart. Or go to youtube.com/CFRN. Either way will do the trick. Not only will you be able to see the chart, but you'll also have access to the chat box. So if you have any questions or any thoughts, ideas that you want to share with the audience, by all means, type them into the chat box. Now, nobody sees what you type but myself and Michael. So don't hold back. Don't be shy. If you got a question, let it fly. All right. Let's take a quick look at the numbers from around the world. These are the cash markets. The Dow is positive today, up 35 points. NASDAQ is up 8. S&P 500 is up 4. And the Russell 2000 is up 3.5. No movers, no shakers. All green, but a quiet shade of green. In the commodity basket, crude oil is up 55 cents, trading 43.08. Gold is up $6, trading $12.51.80. As we move to the European markets, the FTSE closed down 8.5 points. The DAX was up 19 and a, well, we'll call it 20, and the CAC was up 7.5. Mixed, but no movers or shakers in either direction. Quiet. And the Asian markets, the Nikkei closed down 28 points, Shanghai closed down 9, and the Hang Seng closed down 20. So everything was in the red in Asia, but again, not by much. Europe's mixed, not by much, and we're green here at home, not by much. Now, President Trump is having a meeting at the White House with top CEOs and venture capitalists, but really the news up on the Hill, Senate Republican leadership has released a draft of the long-awaited health care bill, ending weeks of speculation and a secretive process that frustrated not only the Democrats but even a few Republicans. The legislation has a name. It's called the Better Care Reconciliation Act of 2017. This would roll back much of the Affordable Care Act, or the health care law better known as Obamacare, including various tax provisions. It would also scale back funding that goes towards health coverage for low-income Americans and tax credits for middle-income earners who purchase their own health insurance, according to the draft. The plan would also provide funding designed to help stabilize the Obamacare insurance markets in the near term and funnel money through programs to cut off access to funding for abortion providers. The Senate legislation contains key differences from the American Health Care Act, the House GOP's legislation to dismantle Obamacare. The disparities could be sticking points if the two chambers have to compromise on the bill, which they would have to do before it could reach the president's desk. But first, the legislation faces an uncertain future in the Senate as it faces some pushback from both conservative members who think it may not go far enough in repealing Obamacare, and moderates concerned about its slashing of Medicaid spending. Like the House legislation, it could be subject to significant changes to get the needed number of votes. Senate Majority Leader Mitch McConnell is pushing for a vote by the end of next week, in part to avoid further public scrutiny of the bill over the week-long July 4th recess, so they'll be off the whole week. Similar scrutiny periled the original version of the House legislation. McConnell can afford to lose just 2 members of his conference for the bill to pass. Now, briefly, what's in the bill? To help people pay for insurance, the Senate bill proposes tax credits based on income level, a feature of Obamacare, rather than on age, as the House bill calls for. The bill would make anyone earning up to 350% of the poverty level eligible for credits Obamacare caps that at 400%. Additionally, the credits would be capped at a lower percentage of overall medical costs than those under Obamacare, making them less generous overall. What that means is that while the tax credits would be more generous for older Americans than the House bill, fewer middle-income people would get financial support to pay for coverage, and those who do would get less. The Senate bill retains the House's per capita cap for federal Medicaid spending. After 2025, however, growth in spending would shift from the Consumer Price Index for medical care to the CPI for all goods, a lower level of growth. Now, what that boils down to is states would receive less funding each year from the federal government to help cover low-income Americans, and after 2025, the rate of growth would decline, leading to even deeper potential cuts for the program. I don't think this is the answer that anyone was looking for. Much like the House version, the Senate would do away with things like Obamacare, 3.8% tax on investment income on people earning an annual income above $200,000. What that means is that the taxes in Obamacare fall predominantly on a small percentage of wealthy Americans who would see their tax bills fall. For instance, Republican megadonor and casino magnate Sheldon Adelson could have his 2017 tax bill cut by roughly $44 million. Yeah, but there's some people who still can't afford health care. Or if they can afford health care, they can't afford to go to a doctor. Of course, on the internet, you can read the full bill on the abortion portion. In addition to restricting anyone who uses the credits or other funds from getting a plan that covers abortions, this would effectively defund Planned Parenthood. It is unclear if this will pass Senate rules. So it's out there. Like I say, you can Google it up. The official name, once again, the Better Care Reconciliation Act of 2017. Doesn't have the snap of the Affordable Care Act, but it's something you're going to hear an awful lot about as it goes back and forth. The problem is with Republicans in control of both houses. The fact that we can't seem to get any legislation through doesn't look good, doesn't bode well. And somebody better wake up and do something quick, or, well, that writing is on the wall. So, pray for America. She needs your prayers. Michael, if you're ready, you can snap on in here and give us a recap of everything that happened in the live training room today. And I can see your charts, so I'll hit mute on my end, and I'll be here when you're done.
Excellent. Yes, sir. Excuse me. Okay. Good afternoon, everyone. Today is Thursday, the 22nd day of June, 2017. Today, I'm sorry. If you have not taken the free trial with us, you need to just go to the homepage here at CFRN.net. We've made this really easy for you. Right up here at the top, there's a banner that says Learn Our Strategy, Use Our Indicators. Click here. You simply have to click there, put in your name, put in your email address, click Register Now. Once you've done that, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, you will not get a free trial. Okay, you must click the confirmation link. All right. That said, let's go look at the spreadsheet. If you're going to read the spreadsheet, you're going to read all the CFTC risk disclosure stuff down at the bottom. Today is the 22nd day of June, as I just said. We lost 8 ticks in the euro, 8 ticks in the YM. We made 16 ticks in crude and 7 ticks in gold, putting us at plus 140 on the morning. Took 93 minutes and 12 opportunities to get to the goal for the day. At that point, we were up 140, and then we took one more after we got the goal, and it was a break even. On the month now, the gross is 1780. That's over 16 days, averaging $111 a day. $111 a day. On the year now, over 117 days, we're at 17,915. That's averaging 153 per day. 153 per day. Okay. All right. Yeah, that's it for there. Okay. So I had drawn these boxes in at the end of the room this morning because this is what I want to see gold get out of before we did anything else with it, and it has not gotten out of it. On gold today, the first one right here was 2 ticks, and we missed that, and the second one right here was 5 ticks. Now, I could have gotten the goal for the day. This went down and hit what I needed for the goal for the day, right there, but then it came back up and took me out at plus 5. Then we didn't do anything else with gold. It flattened right out. Okay. The euro, we had a break even there, then a stop out there. Then I wanted to see the euro get out of this mess before we would do anything else with it. And during the break, it did get out of that mess. And it gave just one shorting opportunity here that likely would have been plus 1 or a break even. Okay. On crude oil today. Crude was our big winner today. But we started out with a missed one right there, then a break even, then another break even. Then finally up here we got 3 ticks on that. Then we got 8 ticks on that, and I thought that was going to be enough to get the goal for the day, but I had calculated off by 1 tick. We missed that one, and right here we got 5 ticks. This is where we got the goal for the day. Okay. And then crude just started going sideways. Got really messy and went sideways. Natural gas. Now, this big run-up right here was matched with a run-up in crude. But we had natural gas inventories come out at 10:30. That's when we started looking at it. We started out with a break-even here, then a missed one right there, then another break-even over there, then another break-even there. Okay, on the natural gas. So we ended up with a whole bunch of break-evens. YM, which was hidden back here, we had, oops, wrong way. There were a couple of things in here earlier on that I had not seen. One was a bounce off the BBC right here. Okay, another one was a close above the trend line right there. Another one was a momentum trade right there. That one I did see. And then I finally did this one and we stopped out minus 8 ticks. I didn't do anything else with the crude. I mean with the YM the rest of the day. Okay, the ES had gone right up into the zone, and so we had to put the YM aside for a little while. Okay. Now on the ES, as you can see, it was just dragging along on the weekly trading zone right here, and then something happened, and it ran right up to the next zone, and now it's just been stuffed at that next zone. Okay, so there really wasn't anything that we could do there with that. Yeah, and that's it. Let me open up the question box here. Good afternoon, Pete. All right, and we will, yeah, that's it. That's it. So now I gotta bring this back up. All right, again, if you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. We were minus 8 on euro, minus 8 on the YM, plus 16 on crude, plus 7 on gold. Comes out to 140 plus total. That's over 93 minutes it took us this morning, and 12 opportunities to get to the goal for the day. At that point, we're up 140, and we took a total of 13 opportunities. It's not up to him. It's up to the math. The markets have to be volatile. If the markets have volatility, then the zones get spread way out. On the month, we had 1780. That's over 16 days, averaging 111 per day. On the year, we're at 17,915. That's over 117 days, averaging $153 per day. Okay. And with that, I will slide this over, minimize it, and I can pass it back out to Studio A, fabulous Phoenix, Arizona, overlooking the nation's largest city park. Ha! I got it all right that time.
Good job.
And I don't even have my note.
That's really good.
Yes. Yes, it is.
Okay. Let's get this thing rolling. Yeah, I hear you, Pete. So the recap was
12 trades, 93 minutes, and $140 per contract.
Gotcha. Now, good job. July 3rd, are the market's going to be open?
I don't know.
That's a Monday. July 4th falls on a Tuesday.
I would bet it's just going to be the 4th that's closed, but let me go check.
Yeah, I'm thinking you are correct.
I'll check. Good Friday, Memorial Day, President's Day, Labor Day, Columbus Day, Independence Day. Actually, let's open this thing up because it says, hey, where is it? Oh, there it is. I could open it like this. All right, here. Do I still have the charts? Oh, you got them. Okay.
No, I got them.
Regular close, early close, reopening. Monday, July 3rd. I'm scrolling down. It looks like some things. Interest rate products, Forex products, energies, metals, and DME products all have a regular close.
Looks like some markets are going to close at 1 p.m. on July 3rd.
Yeah, looks like there's some that are closing on July 3rd. There's a bunch of stuff closed on the 4th, and some stuff is closing early on the 3rd. It looks like grains and oil seeds, livestock, lumber, dairy, those are all closing early.
Yep. So
So it looks like
it's going to be
on
quiet.
the 4th, stuff is closed, and on the Monday, it's closing early. So yeah, it will be quiet on Monday. It will indeed. So what have we got? Oh, I was just thinking of something.
All right. Well, so there you have it, guys.
There you have it. I totally forgotten about that.
Okay. Other than quiet markets and other than healthcare bill, that looks like it may have a tough time getting through. Let's see what other headlines we have out there. Uber tops the list again today. Tech investor Bill Gurley is leaving the board of Uber. The CEO quit yesterday. I mean, I don't know who's left every day. It's a mass exodus. Gurley will be replaced with Matt Kohler, who is another partner at Benchmark Capital. Snapchat has reportedly paid over $250 million for an app that lets you track your friends. It's called...
Dwayne?
Yes. Oh, hi, John. Welcome to the show.
Hi. Hi, how are you?
Very good.
When you mentioned Uber, I want to say something about Uber.
Sure, go right ahead.
I think Uber is the next Enron. It's
Really?
A pumped up deal that, yeah, I really do. Look, they're losing money. I mean, for God's sake, if they're not making money right now, they're never going to make money. And they've been losing billions, and the whole thing is kind of built on a kind of an artificial platform. I mean, it's a great idea. I'm not saying that, but I think, Lyft is increasing in market share as well. There's a lot of competitors starting coming into the space, especially in China. They've got some Uber equivalents in China. And I think the whole thing is just like they've raised a huge amount of money from people at sky-high valuations. Mm-hmm. And those valuations are not valid today. Those valuations, I mean, look, technically this company is it's not that far from bankruptcy in my view. It's kind of, if it was a public stock, I think this stock would be plunging, just like in right now. And I mean, they may be able to turn it around, but when the CEO quits and everything's falling apart, it's a very bad sign. Maybe he's got it getting out before everything hits the fan. That's the way it looks to me.
Yeah, it's just been one scandal after another, and when they valued that thing early on at $40 billion, I said,
60, it's being valued as high as $60 billion.
Oh, as high as 60. I said, guys, we're talking about a company that they don't really have any capital assets. They, it's some guy with a laptop in a coffee shop. Of course, I was, tongue in cheek with that, but they don't own the cars. They don't. They do have employees. They have employee picnics, and the CEO, has to send out an email cautioning the employees, not to have sex at the company picnic. I mean, it's just one thing after another. But the valuation alarmed me from, I've been talking about it ever since I saw the 40 billion number. I'm like, how's that even possible? Who's buying into this? Who can believe this? Who can accept it? I mean, yeah, you're right.
Well, believe it or not, there's a lot of smart people, they're buying into it. But they get listen. The top of the market, people lose their, maybe they've had a string of winners, and they think they're invincible, and then they fall for a big one, just like Enron, same sort of deal. It looked great, and one time Enron was the 5th biggest company in the U.S., and within a short, within a year after that, it was out of business. This one feels the same way. Certainly, the losses. Look, it's a great business for a lot of people. I'm sure it's helped a lot of people, employment-wise, and all that. It's been a big boom, but
I have a nephew who just had his first day on the job with them yesterday, I think.
Well, there you go. Look, if they can keep it afloat, all well and good. But it just feels like it's, if they have to go back and raise more money, which they probably will, or if they try and do an IPO and it's a flop, that's one after another. That's probably their only options right now. But I think raising money at the previous valuations is out of the question. I don't think they can do it. They may have trouble. Look, if people look at the numbers, if the numbers as bad as it looks, who's going to put money into a deal like that?
If you take an Uber ride and you pay $20 for the ride. What's Uber's slice of that pie? Any idea?
I don't know. It's probably 20 or 30%, something like that, maybe more. I don't know. But you know, it's interesting. Jim Rogers came out of some while back and talked about, you know, if there's a downturn, a lot of these borderline businesses are gonna flounder. And he's basically saying, you know, he's saying that a lot of companies are going to disappear. And it's like Shark Tank, you know. I mean, we've had a Shark Tank sort of started right at the beginning of the recovery, and all these amazing stories about people who've, you know, basically rose to stardom, selling products that are really discretionary income type products. You know, they're not. There's some products, maybe 10% of the products on Shark Tank, you know, you really might need to have, or they're really useful. A lot of them are just, you know, peripheral stuff,
right.
And, you know, wacky, almost wacky. But if we get a downturn, and all of those businesses are going to collapse, because first of all, the sharks have got too many businesses to run now. They're overwhelmed with all the deals they're involved in, and they just can't devote the kind of attention to each one. I think it's very difficult to do that. You know, that most of them had a big pop because of the audience, you know, and because, like I've always said, there's sort of about 1 million people around in the States who have a lot of money and will practically buy anything, you know. But you know, we're getting to a point where we have to get this tax cut done fast, because that's going to be the lifeline for the economy. It's probably going to give the economy a whole new boost, but it's got to be done. Because the indicators, I mean, look, explain to me why the U.S. Treasury bonds are at highest level in, like, in about a year or half a year or so. You know, why they're just starting to come off, so maybe the economy is picking up a bit. But the bond market is a very sensitive indicator on the economy, and when the bonds are, I mean, the Fed's raising rates and bonds are going up. The world doesn't work that way. You know, the Fed's raising rates, bonds should be plunging. So something's not right. And a lot of the, you know, look, it's sort of a hot and cold economy. You get hot spots, and then you get a sort of bad number. But it does feel fairly fragile, and it kind of fits with my view that probably, as I said yesterday, the window of high point window is somewhere between July 21 and August 21. Sometime in that, we're possibly going to get a big pullback. Now, right today, I just want to comment on a few things. Coffee, which we are short, we've been short for, I don't know, from about 140 or 50. Much higher than where we are. We're plunging to new lows today. We just hit 119, below 119 a minute ago. I think there's going to be a rebound in coffee, you know, possibly in the next, maybe going into the end of the month, which is the end of the quarter as well. So, you know, possibly within the next week or two, just because of the price has gone down so much. I mean, that's another thing.
What's the pressure on price?
Well, I don't look. You've got Starbucks, and your cost, the environment for coffee couldn't be better, and the price is plunging. I mean, there's something not right. Either people are just not paying $4 or $5 for a cup of coffee anymore, or a lot less people are doing that. You know. So, and the other thing is, you know, maybe the growers saw all this Starbucks and planted, you know, a whole lot more coffee, and, you know, very big in Kenya, it's big in Indonesia and in the Far East. It's big huge in Brazil. It's huge in Colombia. It's big in Mexico. So, you know, there's plenty of supply coming from all over the world of the coffee. And now these coffee. I'm telling you, these coffee producers are probably underwater big time. And not in that, even in Colombia, they're trying to stop people from growing drugs and putting them into coffee. You know? That's a big deal. So all of these things have kind of impacted the market.
Right.
And even in spite of disease and other things that have happened, you know, nothing changes. The only thing that I would say is, look, you might have the best of all worlds here. because there's not, perhaps you can never say never, because one time it looked like there was no risk in the sugar market and went all the way down to 3 cents or something. But that was back in the 90s, or no, the 80s, I think. Coffee, you could say, well, I can't go far wrong buying it at 120 or 119. Well, it could go down to 60. I wouldn't rule it out.
Yeah, take a look at crude. I mean, that's an example of what can happen.
So the point is that, and by the way, sugar is plunging to new lows as well today, which is so all these softs, all these commodities, orange juice, the whole cocoa, they've all kind of taken a big plunge. And I'm telling you, these and milk as well is another one. So these and lumber, all of these things are very sensitive economic indicators, and especially milk, because when times are tough, people just don't. Milk is a kind of discretionary item, and when milk goes down, the economy is usually not doing too well. So the coffee. So the one redeeming factor in coffee that I wouldn't be buying it necessarily today, but if we do get a kind of a bounce in coffee, it's worth taking a shot at that. So that's what I'm going to be looking for here in the next week or two. When I see a reversal, when I get a buy signal, I'm going to take it, and I'm going to hold it, because then if the next day is going down again, I'll sell it. But one of these days, if there's reports of a frost in Brazil or something, that could change everything. You could have coffee go to $4 a pound. It happened before, and it's a long, long time since it happened. So now, normally when that happens, you tend to get an up market ahead of it. It's almost like the market anticipates the frost. So, and also when a market gets too beaten down like this, there's probably going to be a snapback. In fact, we've got a little bit of a buying coming in here at 118.50 right now as we speak. So I think I'll take a shot. I might even take a shot at it right here. Yesterday, by the way, we did exactly that yesterday. We literally caught the falling knife in crude, and went long right on. Listen, probably 10 cents off the low, 10 or 20 cents off the low in crude yesterday, and we are actually still long all the energy products right now on this bounce, because look, you got a new crown prince in Saudi Arabia. I just figured maybe he's going to, he's just come on board. He could say something positive about more cuts. Even the Iranians are talking about cutting the oil output. So that's probably what gave the oil a lift here. Mm-hmm. And if you remember, a week or so ago, we said about 42 and a half might be it for the crude. So look, we've had a bounce. I wouldn't call it a huge reversal, but we might come down and test. I think if we come down again to 42, there's a risk of going all the way down to 39 or even 37. We could potentially go all the way down there. But right now we're up, and if the market says, if the market turns down again, then we'll go the other way. But these are extreme sell-offs going on, and in the grains too. The grains are getting to a point where they might make a double bottom here in the next few days. They're kind of just about there right now. But the grains, and look, the one thing that might help the grains is the farmers are talking about the hot weather affecting it. Same with the cotton. The cotton might be a buy right about here. It's got down to 66.50 this morning. And that's a pretty extreme sell-off from about nearly 80 down to 66. I think cotton might be ready for a bit of a bounce on weather issues, and also sometimes after you just had that hurricane go through Louisiana, so that sometimes affects the cotton crops. So let's keep that in mind. Anyway. Yeah,
we are headed into that season.
Right, we've been short the coffee market from a great height, so to start taking in the shorts here, covering the shorts and looking to go long is not necessarily a bad idea. But right now it is really something really major going on with this. This market's absolutely tanking today. The interesting market I've been sort of adjusting my stuff here. I'm still sort of going through a beta test, even though it's been working very well. As you know, we absolutely have nailed the farmer rally right from the lows to where we are today, and these stocks are just absolutely soaring. Look at GILD. We got into that thing down at the low 60s, and it just hit 71 a minute ago. The Celgene was down at 120 or so. It's just hit 130, almost 135. These Clovis. Remember I said about Clovis from 87. I think we got in at 86. We got out a couple of dollars higher. We got back in just around 87 and a half or so, and it just hit 96 a minute ago. I think Clovis is going a lot higher. It might pull back a little bit here. We also mentioned Twitter. I think Twitter, we've been long Twitter for about $1.50 off this last low, and Twitter is a potential takeover target, so it's definitely worth holding. And look, the last, which we commented on, Trump's followers right now on Twitter are up to 52 million. And the last time Twitter announced they had 9 million new followers, most of those were Trump's increases. Well, we probably had another 5 million or even more since then. That's going to probably be better, and that would move Twitter back over 20, in this next quarter. So, and look, we're going into the end of this quarter in a very high. We're making new all-time highs. Not quite on some of these indices. If we keep going like this for another week, we're probably going to be hitting new all-time highs by the end of the quarter. And in some of these drug stocks, it's going to be the same. The Nasdaq was very tricky. Yes, in last 24 hours. It made a new high last night. We sold it at somewhere, I think it was about 5,800 or a little bit above that. I just noticed it gave quite a strong sell sometime in the middle of the night, and we decided to just take a shot at selling it and shorting it. We covered that down near the lows this morning, even though they kind of hit it pretty hard at the beginning, but it's back to its old. Actually, we got a very strong buy signal off the Nasdaq this morning on that reversal upwards, and it's starting to impact the Nasdaq right now as we go higher. Interestingly enough, on my work, none of the only index that was the two indices that were really positive yesterday were were confirmed on a buy trend, were the drug stocks and the Nasdaq, and to some extent some of the tech stocks, especially AMD, which is flying. They've come out with another very, very good chip, and somebody who's really smart is telling me that Intel's chips, that are costing $2,000 and $2,400, AMD, you can buy the same chip from AMD at about $400 to $500, and they're even more powerful. So that's one of the reasons why AMD is really starting to get some traction, and it's probably going to go a lot higher because AMD has this habit of screaming higher towards the end of the cycle. And it appears to be doing that right now. So interestingly, we got a turn. I mentioned this. We got a turn actually overnight. As the Nasdaq was going down, the other indices, the S&P and the mid cap and the Dow were actually turning up. They didn't turn up right away. They kind of made actually a kind of a head and shoulders intraday head and shoulders bottom. And now we are moving higher. Although, look, I wouldn't be too worried about the Dow lagging here. The most important index today is the mid cap, which was looking sick yesterday. It's really gotten renewed strength, and that's, to me, is extremely important. It's very powerful, and we're back long, almost from the exact lows of this sell-off on the mid cap and the TNA. And the S&P is also clawing its way higher again. So all of these are back in buy modes. All these, and I'm trying to get this straightened, to a point where we're sort of long more for an intraday or inter-day moves, rather than kind of in and out all the time. Although we have to sometimes on the Nasdaq, it's so volatile. Sometimes we have to, like this morning, you can't be long when the thing is plunging. I mean, that's just against my DNA. You have to get out and go short and turn and get back in when the market starts to turn. Otherwise, that's what everybody else does. All these fund managers and all that. They go along and they think we're going to go along forever, and then one day the market tanks and they get totally whacked out. So that's not the game. That's not what we're doing here. And in the same way that you're sort of doing these intraday or intraday type moves that these intraday type moves that are sorry, that you are able to capture very, very well. I'm sure you caught the grain moves down.
Oh yeah, soybeans. Well, that's really the only one that we follow. And last night on soybeans, when we sent out the alert, we said to consider selling 9.15. So it dropped to 9.12, but it did it twice. So this second time around, it hasn't quite made it back to 9.12. So yeah, I mean, we're pretty close to rolling into November soybeans. I'll have to check the volume and see when we're going to be rolling that. We'll roll it as soon as volume in the November contract exceeds the current contract. Now, going back to pharma for just a minute, and then I want to back up to Uber for a minute. This Martin Shkreli.
The LABU could hit 100. It's at 70. Just hit 70 and a half right now. It's going to. I think the farmers are just unstoppable. They're going crazily higher, and it's maybe because they're approaching this healthcare deal that it's actually driving the pharma stocks. And it's funny. Somebody was telling me this morning what they were paying for insurance, which is something like $2,000, maybe $2,500 a month.
Right.
And the same thing yourself. I mean, you could lease a Rolls Royce for that kind of money. I mean, it's just unbelievable. In fact, you could have a fleet of cars for that kind of money per month.
Many people in Arizona pay more for health insurance than they do for their mortgage. Many people.
Yeah. But that's kind of an interesting. I don't think I came up with that idea, but you could actually, you could lease a Rolls Royce on what you have to pay for insurance, which is just outrageous. It's insane.
Now, healthcare, pharma, all of that. Martin Shkreli, of course, 2016, he was all the headlines, bad boy of pharma. He's actually going to trial next week. Now, what do you think? He faces as much as 20 years, not for the price gouging, where he took some drug that is, it's considered a life-saving drug for the people who need it. He raised the price from $13.50 per dose to $7.50. So that gave him a bad rep. It gave him the moniker of the bad boy of pharma. But it's the other stuff that he's done that landed him in legal trouble. 2 months after he jacked up the drug's price, he was indicted for allegedly ripping off investors and then defrauding his other company to pay them back. But his $4 million defense team suggested Monday that they may argue that Shkreli cause the investors no harm by later compensating them. His attorney said this defendant, whatever he did wrong, ultimately made them whole. What are your thoughts on that?
Yeah, not only that, apparently he lost. He was worth about 70 million or something, briefly, and he's now lost all that money, whatever he had. Maybe it was because of the stock tanked or something, but he's not in such good. He's claiming to be in dire straits right now. So.
Well, this is such an interesting fellow. I mean, at the young age, he's run a couple of hedge funds. He's been CEO of a couple of publicly traded companies, and he's just early 30s. But he will sit at night in front of his webcam, and he points the webcam at himself. I don't know if he's still doing this. His attorneys probably told him to knock it off, but he was known for just sitting for hours on end with the webcam pointing at him as he surfed the net. And then when he would go to bed, he would point the camera at his bed. Not doing anything weird or obscene, but just, you could watch Martin Shkreli sleep. So I think he suffers from some kind of, obviously he's brilliant on one side to have run these hedge funds and to be CEO of publicly traded companies at such a young age, but there's also something, obviously, there's some wires shorting out somewhere that bring about this behavior that he's exhibited. And it's all been pretty quiet. I think his lawyers have told him to kind of lay low and stop drawing attention to himself. But they expect the trial to run 5 to 6 weeks. And they've got a pool of 130 potential jurors. They lowered his bail from $5 million to $2 million so that he could start paying for his trial expenses and pay back the IRS. He spent $2 million on a single copy of Wu-Tang Clan's album. And Wu-Tang Clan, I think they claimed they never got paid for the thing. So it's just been insanity.
Mm-hmm. Remember I said before this happened that we jumped about 15 points on the NASDAQ while we've been on. Remember I said we had a very strong buy signal?
I'm sorry, say that again?
Worked out. Remember I said we had a very strong buy signal on the NASDAQ?
Mm-hmm.
We jumped about 15 points since I mentioned that.
Let's see.
I think the NASDAQ is going to get back to...
overnight we put in a high up at 58.14.5. And...
yeah, we sold it at 58.10 last night, and we covered it this morning at 57.75, and went back long from there. So that's pretty.
Yeah, we have some difficulty pushing through this 58.14. This will be the second attempt. So that pullback, if we go from the low, most recent swing low up to that swing high, it was a 38% retracement. Right on the nose at 57.70, and so now we're at 58.04, and again the overnight high was 58.14.5. So we'll see what happens. This current 30-minute candle looks very strong. I don't know what kind of volume it has behind it.
It looks great, and look, we're only up 8 points on the NASDAQ, but it feels like we're up a lot more. But that's because we were down like 20 or something, and we've rebounded with quite impressively. And the fact that we're going into the end of the week now, as I actually think I said yesterday that I thought we'd rally strongly into the end of the week, and that's happening. We also advocated going back long the FANGs yesterday. Apple, Amazon, Google, Netflix, Facebook. and all of these are moving methodically higher right now, and Apple's just jumped higher. And I think Microsoft is another one that we were very bullish on. So all of these stocks are looking good. And what's interesting about Amazon is it got knocked down, on the takeover news. It spiked up to about 1,018 or 1,000 and something, and then it sold off right down to 993. But it's come all the way back. And usually when you get a spike like that, and now we're coming back up the spike, it's probably pretty bullish, because if they come out with any kind of good news here, and the Amazon gaps higher, perhaps tomorrow or next week.
What takeover? What are you referring to?
To the spike high that Amazon created when it on that takeover news of Whole Foods.
Oh, the Whole Foods. Okay.
Now,
okay.
Yeah, and it got knocked down a little bit down to the 893, which is kind of a retest. And I think we went back in at around 895 or 6, somewhere around there. So we're about 1,004 right now. But if we continue to rally, and the more we go up that spike and get back towards 1018, the more likely we're going to have a pretty big jump in Amazon to new highs. And I actually think when Amazon starts making new highs, and Google and Netflix and Facebook also, when all these fangs synchronize back to new all-time highs, that's going to give the market a tremendous additional push. Also, the mid-caps, the fact that the mid-caps had a bit of a sell-off and are now coming back, there's a huge kind of sideways consolidation on this mid-cap stocks, and I think that they're the biggest beneficiary of the tax cuts. And so as that becomes more likely, that if we get a major breakout, which I think is going to happen in the next couple of months on this sector, to have the small caps leading the market higher is very, very positive indeed. Incidentally, I remember I said, I think it was yesterday, I said that the advanced decline line was the day before. The day before, I think the advanced decline line turned quite negative, and it started turning positive yesterday, which is what really gave us the guts to go in and buy the fangs again. So we're just having a short-term sell here on the Nasdaq from the 5805, probably coming back to test the breakout of 5800. So probably later on this afternoon it'll be another buying opportunity. But all in all, it's been quite a dramatic week, really, with everything going on. And the gold, as you remember what we said about the gold yesterday. We basically thought the lows were in around the 1242. We got up. We've basically been long since 1242. We sold overnight at 1254, and come down a little bit today to about 1251. I did say if we went back to 1254, it'd be very, very bullish. But we just put in a sell on the nuggets at 32.2, and then Newmont's and the rest of the gold, and I'd be a little bit of a buy on the dust. But right now it's for a bounce, but sometimes these bounces turn into something bigger, which has happened quite a bit recently. So that could be the case right now. I think maybe the gold move with the way the market's going higher so strongly may be hampered a bit from here, and it might actually pull back quite a bit from here on the gold stocks. So and the JNUG has gone fantastically. It went from 17 right up to 19 in a couple of days, or even less than a couple of days actually. So
we had a swing trade on gold from last week that finally triggered, and then it got stopped out yesterday. We talked about it on the show after you had left. The stop loss on it was 1249. So it took that out, and now it pulled back to 1250.30, and we're just a pretty tight little range heading sideways here. So, we were talking about Uber earlier, and we talked about this on the show some months ago, but the medallions for the New York City taxi cabs, I mean, Lyft and Uber have really put a dent in that business. Earlier this year, a New York City taxi medallion sold for $241,000. That was back in April. That's the lowest price in the 21st century. And the sale, which was approved by the Taxi and Limousine Commission, in 2013, there were medallions that sold for more than $1.3 million. And now, I mean, the thing has been knocked down to $241,000. There are currently in New York City 13,587 yellow taxi medallions. However, there are more than 50,000 Uber and Lyft cars. So this Uber, I mean, they not only are they, you know, if they had done everything correctly and not made a lot of the mistakes and the corporate culture and all of that, I mean, they're still, every city they move into, I mean, they're stepping on a lot of toes. You know, this taxi business has been, you know, big business, street level business. You know, a lot of them are the kind of guys you don't mess around with, and people are upset. So I don't think Uber is long. I mean, they've got a business model, obviously, that somebody's going to do it and somebody's going to get it right. Maybe it's Lyft. I don't know, LYFT, but I don't think it's going to be Uber. I think they've made too many mistakes. They've lost all of the talent that brought them to where they are. And like you said, it may ultimately come to light. Now, this valuation, I mean, something's worth whatever people are willing to pay for it. Now, if they somehow misled people into believing that the company was worth more than it actually was, that's one issue. But if people just got, you know, caught up in the moment and spent their money unwisely, so it'll be interesting to see if it does become the next Enron, or if it just becomes, you know, a great idea that was mismanaged.
Mm-hmm. Yep. I actually think these medallions might be in for a bit of a bounce in price here with the troubles that Uber is having, because they still have value, those things. But
well, yeah, I mean, again, the one I was quoting sold for $241,000. That's basically $250,000. But as Uber and Lyft and I'm sure other competitors will crowd into the space, there may be a bounce in the medallions, but unless New York City did something like put their foot down and say we're not going to allow these, I guess gypsy cabs is probably the term that was used in the past before Uber legitimized the concept of a gypsy cab. So no offense to anyone who might be a gypsy. I had a very good friend who was born and raised in the carnival lifestyle as a gypsy. So anything else you want to add today?
Well, I did send you that, some people might have seen it, you know, the Paris Air Show is on this week, and they were unveiling this boom technology company, which is trying to put together supersonic and hypersonic transport, and it's backed by Richard Branson, and the plane they're sort of envisaging is I think it's, if you Google Boom Sonic, I think it's I sent you the link so you've got it there, but it's a very neat looking plane, probably about 55 people can carry, and can get across the Atlantic in 2 or 3 hours. pretty impressive. But when as I've said on the show, the hypersonic transport isn't that far away.
I saw a headline, the Return of the Supersonic.
Yeah, it's. I think that the hypersonic is coming, and when it comes, I mean, it's just unbelievable. You can be flying from Los Angeles to Sydney in a couple of hours. It's going to really. If you think the world's small now, it's going to get a lot smaller real quick. Once these, and we're probably within the next 10 years, we're going to see this, and it's going to be a huge boost for the economy, because all these old planes will have to be retired, because people want to travel faster, and it'll take time, but it'll create a whole new industry, and also I think the flying cars situation is a couple of years away from something from actually being able to fly in your own car kind of thing. So
yeah, unless they figure out a way to do that autonomously, computer phone.
Well, that Lilium, you got to look at this Lilium. It's the greatest thing I've seen. It's just to see that thing take off, and it can do 300 miles an hour, and it's basically solar powered.
What's it called again?
Lilium.com. Lil, I think it's Lillium or AM. I'm not sure where I kind of.
Yeah, I'll find it here. Lilium.com. 1L. Electric vertical takeoff and landing. So this is it, guys. For those of you that can see it, look at that thing just straight up. The world's first electric vehicle takeoff and landing jet. 300-kilometer range, travel from London to Paris in 1 hour.
That's pretty incredible.
Fly as fast as a Formula One car. Commute without emissions and noise pollution. On demand, order your air taxi to the nearby landing pad. Yeah, this is pretty fascinating. It's going to be. Now, are they projecting when this will actually become available? Let's see.
It's probably a couple of years away from being, and they may be able to perfect it. This is sort of like the prototype. I mean, jeepers.
Mm-hmm.
But it really looks like the real deal out of all the contenders. There's nothing like this. This is just a fantastic thing. It's got everything. It's got the vertical takeoff. It's got the acceleration. It's got the speed, and potentially it's got the safety. And it's automated as well. And it's automated.
Yeah, I think that's the key. Is that it has to be automated. I don't see any way around that. And getting a pilot's license, I mean, that's no small feat. It's something anyone can do if it's what they really want to do. But I think it's got to be push in the coordinates, punch them in, latitude, longitude, and away you go. But I don't know. And the autonomous car thing, that still seems. It doesn't seem like a tomorrow kind of thing. I don't know. Maybe I'm wrong on that.
It's a couple of years away as well. But once it gets to be okay, it's going to become mainstream very quickly. No doubt about it.
Don asked, "What do you got on hogs? Anything?"
On hogs? You mean hogs?
Mm-hmm.
I can't get that. I can't get the hogs for some reason. I tried it the other day.
Okay.
Give up on that.
I think the symbol's HE.
We actually put out a buy on the coffee right here. We took a stab at it at 115.5. It's at 116.20 right now. It might be in for a bounce here. So it looks like. Look at the grains hitting new lows. Everything's getting hit pretty hard here today.
HEQ7 lean hogs. Well, they had quite a sell-off today. No, they sold off from 81.60 down to 80.60, and it looks like it might be putting at a bottom there.
Usually, when the grains are going down, the hogs tend to rally a bit, you know, but not today.
Let's see that sell-off today. What do we got? About a 38% retracement from the highs of the last couple days. The most recent low was back on June 15th, and then the most recent high. Well, we've hit the same area, 82, 50, 55. We've hit that about 3 times now, and then we got just in the last. What is that? In the last hour is when we hit that 38% retracement. So, Don, perhaps there's a bounce coming here. But if it does start to bounce, you definitely want to watch this level right here for potential resistance.
Running up to July the 4th, usually, barbecues, hogs.
Right. Yeah, and the 4th, we were talking about that earlier, falls on a Tuesday. So, markets are going to close early on Monday, so that week basically it's going to turn into a 4-day weekend, and some people will be leaving early on Friday, I suppose, so it could actually become closer to a 5-day weekend. Basically, a market, basically a week lost out of the markets. So. Okay. All right.
Well, listen, thanks for the invite, Dwayne.
Thank you, John, very much. Appreciate it, and we'll talk to you tomorrow.
All the best. Bye.
All right. So you guys can see the low here, Don, on the hogs up to the recent high. Now it's on a 10 tick, but I mean you could kick it over to a 1 hour. It's going to give you the same thing. Which that is the last leg up. Now, because we have switched to an hour, what we can also do is we can take a look at the entire picture, the big picture, and go from here to here. Okay. Now we can see where before this high was put in, so before this became a 24% retracement, this price area served as good support. Leg, retrace, leg, retrace, leg. And then a deeper retracement and a failure to put in a higher high. So that marks the end of the trend, especially when it tried to rebound and double topped shy of that previous high. And looking here, although that looked like sort of a promising bounce that we saw on that last leg up, which would be right there, bigger picture, looks like, see, we got overlap here, and this overlap, support. Now again, this support is 24% on the bigger picture. That was before the high was put in, so it wasn't a 24% retracement when it served as good support. It support, and it broke through support, but then price popped right back up through it. We hit the 38 the bigger picture. So I think I would, if you're interested in trading hogs, then I would wait for price to get back up into this little window of opportunity here, or for a potential an opportunity to get short. Yeah, this will take some patience, but being short here or being long here. In here, I think, you know, you might, depends upon how long you want to hold it, if you want to hold it overnight, if you're looking to day trade it. I mean, it just depends on. And I grabbed the Q month, but there were other months available, and I don't know how actively they're traded. I think the N is probably done, so Q is probably the correct contract. Is that what you're looking at, Don? The Q contract? Oh, you're still looking at July? Okay. Well, if you're looking at July, then let's go to a daily chart. And let's put some volume on there. So today in July, we've got a little over 10,000 contracts traded today. That's in the Q contract. 10,245. Okay, so now let's look at July. HEN. Yep, July. Actually, July is about half the volume of the Q contract. So I think, see, you only got 5,000 traded in the July contract today. So yeah, I think it's time for you to start looking at the Q. Now, hogs, that's not a market that gets brought up very often. Is that something that you've traded a lot of, or is it something you have an interest in? I know that sometimes the spreads can be rough. I've heard more arguments for not trading than for trading. So if you have something, okay, so you're just kind of looking at it. All right. Well, if you find something that's meaningful that you can kind of wrap your arms around, by all means, tell us what you find. Okay. Let's see. I think there's a couple other headlines there that. Oh, yeah, we were going to look at this. Snapchat, which has had a very rough time since its IPO, recently snapped up mapping app maker Zenly in what was likely one of its largest acquisitions ever. It looks like Snapchat's parent company is already using Zenly's technology. Snap is actually up 46 cents or 2.5% today. I don't think Snap's had an awful lot of positive days since the IPO. And there was a question earlier about Uber's stock symbol. There isn't one because it has not gone through an IPO as of yet. And with all the trouble surrounding it, I don't know if it could weather one at the moment. So Snap bought Zenly for somewhere between 250 and 350 million. Snap declined to comment. Zenly declined to comment. Based out of France, Zenly created a location app that allows users to see where their friends are, but in a way that doesn't drain their phone's batteries. Popular in Europe, the Zenly app feeds on teenagers' fear of missing out. Traders suffer from that as well. Users return to the app again and again to make sure they're not missing out on a hot party or event with their friends. Yeah, how do they monetize that? On Wednesday, Snapchat unveiled Snap Maps, a new feature that allows Snapchat users to see where their friends are on a map. The trailer for the feature showed two women browsing a map in Snapchat and tapping on a nearby location to see friends sharing videos from an ongoing concert. Users will also be able to browse photos and videos from specific locations around the world, including breaking news events. And that might be an interesting feature. After Snapchat launched the new feature, TechCrunch and others are quick to point out just how similar it looked to Zenly's app. It likely wasn't just a coincidence, given the acquisition of the company. Snap's most recent acquisition, and its biggest one ever, was its rumored purchase of startup Placed, Placed, an advertising tracking company that reportedly cost $200 million. Okay, so up until Zenly, Placed was the biggest acquisition. However, Snap is known for its secrecy when it comes to snapping up startups, pun intended, I suppose. So it could have made larger purchases that just haven't been reported yet. Zenly raised over $35 million from Silicon Valley's top investors. When Business Insider broke the news of its funding by one of Twitter's earliest investors last September, Zenly lacked a connection to a social network that could turn its amazing location tracking feature into something more than just a creepy tool for users to keep tabs on their friends. I mean, do you... Now, I think the target audience is probably younger than the demographic for this particular radio audience. One reason Zenly was likely a hot acquisition target compared to makers of other location tracking maps. I mean, yeah, I don't think this isn't something new. I think there are already apps that do this. Is that its app is more power efficient. Instead of constantly monitoring users' locations and running down their phone's batteries in the process, the app only determines them when their friends look them up on their phones. Okay. All right. Well, I guess they got to spend their money on something. Apparently looking for anything to just turn the company around. Alibaba's chairman and founder Jack Ma thinks that new technologies could be a threat to more than just jobs. Ma said that new technologies like machine learning and artificial intelligence could lead to the Third World War. Really, Jack? Now, Jack's a pretty smart guy. During an interview with David Faber on Wednesday, Ma said that new technologies like machine learning and artificial intelligence could lead to the Third World War. The first technology revolution caused World War I, according to Ma. The second technology revolution caused World War II. I think that's more opinion than news. Machine learning and artificial intelligence have become a hot topic among businesses as of late, with a record number of firms touting the utilization of the new technologies in their business. The technologies have also raised worries about the implications for average workers who could see their jobs automated away using these new functions. In turn, concerns about geopolitical outcomes due to increased automation have also bubbled up. The third technology revolution may cause the Third World War. Ma has previously warned about the dangers of slowing international trade, saying at the opening of Alibaba's Australian headquarters in February, "If trade stops, war starts." In his view, the worker displacement from these new technologies and the economic stress that it could place on political systems may lead to conflict, as some people will be big winners from the changes while others will get left behind. In his estimation, the First World War came on the heels of upheaval caused by the Industrial Revolution, which shuffled the economic fortunes of different nations and classes, leading to conflict, and similar technologies helped lead to World War II. To head off this conflict, Ma said governments need to get out in front of the displacement and help to adapt workforces to take on new jobs and step up education to provide a backstop to prevent negative outcomes. The next 30 years, the technology is going to challenge a lot of jobs, opportunities. So if we cannot help the local businesses going global, it's going to cause a lot of problems. Ma did say he believes humans would not go obsolete even as these technologies advance. I don't think machines, artificial intelligence is going to replace wisdom. Yeah, that's well said. But there are so many jobs that we're on the... Well, I mean, we've already seen it with the automated checkout in Walmart. In the Fresh and Easy that used to be up on the corner, it's not so fresh or easy anymore since they went out of business. That was a British company that came to America. Not quite a Whole Foods or a Trader Joe's, but somewhere in the middle. And the footprint of the stores it was very close to what Amazon had discussed that they would like to do with their cashierless, practically employed. Well, somebody's got to put the stuff back on the shelves. But we've heard that drones can do that. You know, the drones might be able to put boxes on a shelf in a warehouse up high. Yeah, I don't know that they can restock beans on the shelf, you know. And if you've ever worked in a grocery store, you know you got to block it to the front. So as somebody comes along and buys a can of beans, another guy's got to come along behind them and then pull all the cans, you know, up so that the shelves look pretty. Okay, all right, Jack. Well, if anybody can figure it out, I'm sure you and Jeff can. Google's DeepMind is funding climate change research at Cambridge University. Interesting if they find out there is no climate change. It wants to use artificial intelligence to slow down global warming. Sean Parker has stepped down from Spotify's board. He joined the board in 2010 after investing $15 million in exchange for 5% of the company. Tesla's head of its autopilot software left the company less than 6 months after he joined. His name is Chris Ladner. Uber's Travis Kalanick, who just resigned as CEO, was in Chicago to interview a COO candidate when he got the letter demanding his registration. So he was basically forced out by the board. He didn't leave of his own accord. Red hot cryptocurrency Ethereum. Whoa. Flash crash to $13 before bouncing back to $296. Now, we got to look under the hood on this one. Now, everybody's familiar with Bitcoin. There are a number of digital or cryptocurrencies, as they're called. Ethereum has seemed to be the biggest contender. The red-hot cryptocurrency Ethereum flash crashed yesterday, but has recouped all of its losses. it tumbled from about $296 per coin to a low of $13 in a matter of minutes. The entire decline cannot be seen on the chart as it shows the price in 1 minute increments and doesn't display every tick. Ethereum has snapped back to around its pre-flash crash level. It's up about 3,600% so far in 2017. So let's see if we can get a chart that does show Ethereum flash crash chart. Okay, 28 minutes ago, what caused the Ethereum flash crash? I think that's what matters. Although we can see it in this chart here. And then right back up. Okay. It was a rough day for traders of the world's second largest cryptocurrency Wednesday, as Ethereum plunged from more than $317 to briefly trade as low as 10 cents in a flash crash on the GDAX exchange before rebounding. In a post, GDAX Vice President Adam White said a multi-million-dollar market sell order was placed on GDAX's Ethereum USD order book, which resulted in orders being filled from $317.81 to $224.48 for a slippage of 29.4%. That in turn began a cascade of around 800 stop-loss orders and margin funding liquidations, which sent the price temporarily as low as a dime. A stop-loss order requires the security to be sold when the price hits a certain threshold. And we've all been told since day one, and in the beginning most of us didn't listen because we thought we were smarter than that, but we realized it didn't have anything to do with how smart you were. It had to do with how convinced you were that you actually had a high probability trade opportunity in front of you. Margin funding refers to trading with borrowed money. Liquidations can occur when margin funded positions are closed out automatically to prevent further losses. The combination of stop-loss orders and margin liquidations contributed to the sharp downward spiral, which was followed by a sharp rebound. White said the GDAX decided to temporarily halt trading of Ethereum in response to the price movement, then restored trading in accordance with the exchange's downtime process once it was confirmed that all systems were operating correctly. White said the exchange's initial investigations showed no indication of wrongdoing or account takeovers, but acknowledged that such an event can be frustrating for our customers. Well, you think? White said the exchange's matching engine operated as intended throughout this event, and that trading with advanced features like margin always carries inherent risk. That fine print at the bottom of the page, they're serious. And don't look for the trades to be reversed. Wow. That's got to have some people hopping mad. We are continuing to conduct a thorough investigation and will keep customers updated with any resulting actions. With that in mind, it's important to note that these trades are final in accordance with the GDAX trading rules. Honoring properly executed orders is critical to maintaining the integrity of an exchange. Yeah, but boy, that integrity today is certainly being called into question now, isn't it? Even though they did what they were supposed to do, even though they did exactly what they said they would do. In other words, you had in a stop loss, it got triggered, you were taken out of the trade, only to see the trade, Ethereum last traded at 326.94 on GDAX Thursday morning. Today, CoinMarketCap, a website that tracks market capitalizations for a variety of cryptocurrencies, said the total value of Ethereum stands currently at a little over $31 billion, second only to Bitcoin, which has a value of about $44 billion. That's the entire market. Ethereum has been on a tear in 2017 after beginning the year near $8. Investors have been excited by the network's blockchain, which many see as more versatile than Bitcoin. Bitcoin is actually trading up today, a little over 2%. Man, oh man. We haven't heard the end of this. I can assure you. People are going to be looking at this, and they've already said that they're not reversing the trades. And last on my list, Imagination Technologies is up for sale less than 3 months after Apple said it didn't want its chips anymore. The company has a market cap of around $450 million. Hey, that's a problem when you only have one customer. Apple announced it was going to start designing its own GPUs in April. Imagination's share price immediately fell off a cliff as a result. Imagination put 2 core business units up for sale in May. The board has now decided to put the whole company on the market. Shares jumped 20% today as buyers look to grab a bargain. Apple's decision to ditch Imagination was a huge blow for the UK tech firm, which recorded a revenue of more than $149 million in the year leading up to April 2016. Imagination's partnership with Apple goes back nearly 10 years. Imagination products have been part of all of Apple's mobile devices, the iPhones, the iPads, even the iPods, since 2008. It was one of Apple's most valued suppliers. Apple, which owns a 9.5% stake in Imagination, has been using Imagination's graphics processing unit chip designs under a licensing agreement worth millions of pounds to Imagination every year. But in April, Imagination said in a statement, Apple is of a view that it will no longer use the group's intellectual property in its new products in 15 months to 2 years' time, and as such will not be eligible for royalty payments under the current license and royalty agreement. Imagination employs roughly 1,700 people, so its market value dropped by more than 75% on the day that the news came out. The share price drop was one of the biggest on record for a company of Imagination's size. The market cap is now around $450 million. Analysts questioned whether the company would be able to survive without Apple. In the worst case, survival, let alone value, is in question, according to an analyst at Jefferies. Shares in Imagination recovered slightly after the initial crash, but they were still down around 60% as of yesterday, meaning someone could snap up Imagination for half of what it was worth just a few months ago. And then today, we're up 15% on news that the company is on the market. All right, our good word for the day. Now, this is a good word. Hear me out. Focus on what really matters. Now, you probably already know what really matters to you. And if I can get my notes, I'm going to share it with you. How about that? Let's try it again. There it comes. Okay. Luke 12:15. Life is not measured by how much you own. It isn't? No, it isn't. One day a man was talking to an angel, or so the story goes. The angel said, "What can I do for you?" The man said, "Show me the Wall Street Journal 1 year from today. This way, I'll know where to invest my money and become a multi-millionaire." So the angel snapped his fingers and out came a Wall Street Journal dated 1 year in the future. The man flipped the pages of the newspaper, studying the listings and observing which stocks would be high and which ones would be low. But in the midst of his joy, tears began to roll down his cheeks. Why? Because when he looked over the obituary column, there was his face. God is not opposed to you acquiring and achieving things in life. But He wants you to know that this life can only offer so much, and unless you live each day in the light of eternity, you're going to end up wasting your time on the wrong things. It's okay to enjoy temporary things as long as your main focus remains on eternal things. Paul said this in Acts 20 through 24. My life is worth nothing to me unless I use it for finishing the work assigned me by the Lord Jesus, the work of telling others the good news about the wonderful grace of God. If you live to be 100, you may receive a congratulations card from Buckingham Palace signed by the Queen herself. I think that's if you live in England. But it doesn't compare to the well done you'll receive from God for fulfilling the assignment He has given you here on earth. You know, we all are susceptible to and guilty of, putting our trust in things that are not eternal. Jobs, paychecks, a rise in the value of your home. That was short-lived, right? So we have to step back and really take an eternal perspective. Now, when you go to the bank to apply for a business loan or a mortgage application, they don't ask you about eternity or your eternal aspirations or what treasure you have stored up in heaven. They want to know what do you got in the bank? What do you have of value? Which means the world is always pulling us back into the temporary world in which we live. And so we have to be careful and cautious to make sure that we remain focused not on the temporary things of this world, but on the things that will last forever, because forever is a very long time. It's not easy, but it can be simple. That's our good word for the day. Okay, let's have a look-see at the Concierge Trade Alerts. Now, the markets are so quiet, probably won't see a whole lot, but we're going to take a look anyway, as if we were. Let's find it. Oh, soybeans took a dive. Okay, we had a 3.25 point move. Then we got back above the trigger, and when we looked just an hour ago, we were down 2.5 points at $50 per point, just like the S&P. We've now put in a low at 906.25. So that would be 8.75. That pretty much dropped straight down. Consider selling 9.50. Oh, let me drag it out so you can take a screenshot if you want. There we go. There's last night, and there's the soybeans, 9.15. If you're using the GoTo app, then little thing up on top that looks like a camera, just click it, and it'll save a picture to your desktop. Alright, so soybeans definitely put some pep in your step. Let's see what the rest of them did. Let's go to the S&P. Consider being long 24.35. Should be right about there. Ooh, look at that pullback. It missed it by, the low was 24.35.25. Consider buying 24.35. So, as I always say, important prices, important areas are almost always tested. Almost. We would have needed to go a couple ticks lower for it to actually qualify as its own standalone trade. Now this one cracked 24.35 and hit 38.50. So that's 3.5 S&P points. 3.5. And the swing high went, oh, it looks like about a, well, it went up to 39. So had it triggered, this would have been 4 points, but it didn't because it failed to get back below the trigger. Now, even though this ran up 3.5 points, pretty as you please, in basically a little over 30 minutes, we never get out at the swing high or the swing low because we trail our stop. That's how we trade the Concierge Trade Alerts. We trail the stop and or use the indicators and or trade to a fixed target, and that means that you're going to end up leaving something on the table. Okay. Now, when it only moves 3.5 points in your favor, that makes it tough. But is it possible to get out with a couple points? Yeah, it is. But then you have to look at where your stop needs to be, because the chart will always tell you where the stop needs to be. And then you have to decide, okay, where could I realistically expect this trade to go? Well, realistically, if we look left, we can see that the most recent swing high in this quiet little range that we've been in was 24.40. So could one reasonably expect that this could be a 5-point trade, or at least had the potential for 5 points? Absolutely. Did it go 5 points? No, it did not. Is it possible that it's not done yet? That is possible. But it's not falling all over itself to go anywhere quick. On the Dow. Alright. What time did this go out last night? This went out a little bit early last night. 6:30 p.m. So that's going to be 18:30, which is going to be right there. 18:30. Okay. Consider being long 21,390. Wow. That's way up here. $21,390. Okay. Swing high. 21,408. That's a whopping 18 points. Now the S&P, which pays $50 a point, the Dow only pays $5 a point. Important prices, important areas. We get back below the trigger. And it has done what it needs to do. It got back above the trigger. And so the question is will it make a run for the roses? We'll see. Soybeans we already covered. That's a nice 8.25 point drop. Let's go to the daily for a minute. It won't look pretty, but it'll serve our purpose. Alright, July soybeans. 100,000 contracts traded today. And the upcoming contract, 41,000. Yeah. It looks like we're going to still be in July. Can't be in July too much longer because July's a week away. So that volume profile should shift pretty quick. Remove the volume. And go back to a 30-minute chart. Let's put it on the right contract so it'll look right. Here we go. The thing's still falling. Apparently it's not done yet. From 9:15, we've dropped to 904.75. So if we round 904.75, we round it up to 905 to be conservative. That gives us a 10-point drop at $50 per point, just like the S&P. Bonds. Bonds have been flat for days. Not much has changed. On bonds, we were looking to be buyers at 156.24, which did not get tagged. And the sell side was 155.27, which also did not get tagged. So no trigger on either side for bonds. And flat for a little rally there. $31.25 per tick when they do trigger. 4 ticks gives you $125 per contract. 3 ticks gives you $90 and change. Not a market that I recommend for beginners. And if you came to me looking, I don't know what market I should trade, I can assure you that I'll never say, well, why don't you give bonds a try? My thoughts just don't go there. Okay. All right. So last night, 1830. There it is. Okay. All right. Consider being long GGCQ7 at 1249. Okay. And the initial run up, well, we had this first spike right here. Again, these are 30-minute candles. So the first spike high was 1250.90. So that's $190 per contract. And then price, the following 30-minute candle got back below the trigger, and off it went again. This time, put in a swing high at 1255. So that's $600 per contract available. Now that's what the market made available, but unless you're psychic, are just darn lucky. You didn't walk away with 600. Now, but wait, it went higher. It did. In fact, it went all the way up to 1256, which would be $700 per contract available. However, once this thing hits 600, don't know how tightly you're going to trail your stop, but got to point out that there's a good possibility that on this little pullback here, your stop would get hit before this high was put in. Okay. Now what we've just done in the current 30-minute candle, we've pulled all the way back to 1249. Gotten below it. So now this candle's still got 29 minutes left in the life of it. So it's quite possible this candle could start a new upswing. Okay. And if that happens, if we move back above the trigger and the high of this candle and the low of that candle, when you're reading a chart, that's always something that should jump out at you. Learn to see that, okay? It was support, and then it gave way, and then it pulled back, and this same basic area came resistance and pushed it down. So on a move back above the trigger, you might want to see this high, which is basically this low, get cleared. Now that's not something exclusive to gold. It's any chart, any market. That's just the nature of markets and how they function. Okay, so it's not a particular personality trait, if you will, of gold. It's just trading. Okay. After gold, the NQ. Well, the NQ definitely had some movement afoot. Well, that was yesterday. Last night, let's go to 1830. Right there. Yeah. Okay. No, Bruce, I haven't got to Crude yet. I'll be there in just a second. Okay, on the NQ, consider buying 57.98. Go. Okay, swing high 58.1450. So that's going to be 16.5 points. Times $20 per point. Per contract. And then price gets back below the trigger and right there. Just enough to get you in hot water. And then we triggered a third time and we're just kind of rolling sideways. And there's the volume profile. The first 30 minutes were quite busy. slow down. Okay, I think next on the list, Bruce, is Crude. So let's go there. Yep. Okay. Yesterday was the inventory spike, which we pointed out only, I guess, as a novelty. The alert yesterday was to be short 43.20, but when the inventory numbers come out, we just simply teach, unless you have been trained by someone who is really good at trading news, to whatever the economic report is, whether it's crude inventories or the big ag report that comes out every month, or the FOMC, even if it's just this sort of an ordinary high impact news event, of which we typically get one or two a day or a week, depending on the week, and those will come out. Some of them come out at 8:30 a.m. before the market opens, and others come out at 10 a.m. Of course, FOMC is 2 in the afternoon on those days. Now, so from 43.20 we dropped yesterday. Now, while we would say to go flat in front of the inventory numbers, okay, that's at 10:30 those come out. So that candle started at 11, 11:30, 12 noon. This candle started at 12:30, but you actually triggered in the 12 noon. So on something like this, how long do we stay flat? Well, depends upon how volatile the reaction is, what sort of volatility the news alert creates. Yesterday, as you can see, not so much. Usually 15 to 30 minutes. So we trigger again at 43.20 and a $1 drop in crude. From 43.20 to 42.20. That's $1,000 per contract available. And it dipped down a little bit further. We do have a rule of thumb that says anytime you can pick up $1,000 on any one instrument in any one day, take the money, put the mouse away. If we had the indicators running, because this was such a straight drop, I don't think the indicators would have taken you out until you had probably given back about 50% of the move. Okay. Now, when we get these extended moves that continue down, a significant distance, that's when the indicators can actually be very helpful. Okay. Now, last night, 6:30, 18:30. Right there. Okay. On crude. The email said to consider being a buyer at 43.05. Swing high was 43.32. So that's going to be $270 per contract available. 27 ticks at $10 per tick. Now price has gone back below the trigger. It actually, did it go below it here? I think it did by a tick. 43.05, the swing low. 43.03, yeah, sure did. Got 2 ticks below. And from 05 to 23, so that would be 18 ticks times $10 per tick. $18 times 10, or 180 per contract. Sell side on crude was 42.35, which was the kind of thing you just don't want to see. But it is the truth about trading. So we're going to look at it anyway. 42, I'm sorry, 35. Come on. There. Consider selling 42.35. Okay, first thing of course you got to ask yourself is, does having a stop here meet with your risk profile? Does it honor the rules of the trade? And because the Concierge Trade Alerts are discretionary trading as opposed to the rules-based trading that we do in the live training room, then you've got to ask yourself, okay, one of the rules, and they're very few, we don't want to risk more than $300 per contract. So you have to do your math and see if it fits that. If it does, okay, and if your stop goes up here, then you don't get stopped out here and you don't get stopped out here, but when it comes back up here, you're going to take a haircut. That's if, okay, where you put your stop doesn't exceed the $300 per contract rule. Now, because it's discretionary trading, can you write your own rules? Sure. Can you say, I've been at this for 20 years and I routinely risk $400 to $700 per trade? Okay, well, you know, that's entirely up to you. In the live training room, every rule has a reason and it's ironclad. It's, you know, there's no judgment calls. Everything there's cast in stone. When you move into the world of discretionary trading, that's a whole different ball of wax. You got to think, got to make decisions, and so the drop here was 5 ticks, and the drop here was 9 ticks. So $90 per contract, $50 per contract, and then a little of the upside. Okay. After crude, I think all we have left is the Russell. that webinar. Oh, that's next week. Or was that or was that today? Seems like I recall it either being the 22nd or the 27th. I know we looked at the email yesterday. All right, real quick, let's get this done. 1830. Aha. We sent the alerts out at 6:30, and the market, the Russell doesn't reopen. See that candle, 1730? That candle, 2000? Okay. Consider being long. 1403. Okay, now you got to walk yourself through that same math. Okay, where is the most significant, most recent significant swing low? Here? No, if you went here, but again, you got to do your math. You got to figure out, am I exceeding my $300 limit? You know, if this doesn't exceed your, but it does, because if you put your stop here, we're talking about 500 bucks. Okay, put your stop here, you're talking 400 bucks. And so that leaves us with here, the only one that produced any profit, and at best that was $200 per contract available. 4 points, $50 a point, $200 per contract available. So you'll find an awful lot of walkaways. Nope, doesn't fit the profile. Nope, doesn't fit the profile. Nope, doesn't fit the profile. But with 8 markets, 2 trades per market, and the fact that important prices, important areas are almost always tested, then you can end up with a fistful of trades to look at, and hopefully out of that bunch you'll find something that does fit the profile. And then, you know, the off chance that it doesn't, because the markets are really that quiet, then tomorrow's a new day. Speaking of days, today is Thursday. That means tonight there will be a partners meeting. If you're a partner, your link will show up in your inbox later this afternoon, certainly before the meeting starts at 9 p.m. Eastern. If you've been on a trial, you should have received an email that tells you how to become a partner. If you've not received your email that tells you how to become a partner, send an email to support@cfrn.net or call us at 949-423-6464. Again, that's 949-42 Emini. 949-42 Emini. And you'll get Michael if you catch his voicemail, because sometimes on Thursday afternoons he's busy on the phone. So just leave a message. He'll call you back. One of us will call you back and answer whatever questions you might have. So partners, if you want to email questions ahead of time with charts, now you don't have to take a screenshot. You can simply in your email say I took a trade in crude on Tuesday, the date at this time, Eastern, Central, that's important, okay? Basically we need the latitude, the longitude, the day, and the time. And then when we have our charts up during the workshop, we can zero right in on that thing. And you'll be there watching and you can say, nope, one more candle to the left. Nope, one more. Yep, right there. And then we'll walk through whatever it is that we see with that trade. And then you can share with us what you saw. And then we'll figure out if there was something that you may have missed, or if it's simply one of the trades that gets stopped out. The truth about trading is you will have trades that get stopped out. There's no getting around that. All the clever websites and emails in the world won't take away that reality. And any successful, prosperous trader, any Wall Street legend, anybody who's somebody in the world of trading will be honest with you, okay? You got to be careful with the ones that won't be honest with you. Oh, we figured out a way that, you never have to get stopped out again. 98% win ratio. Yeah, I so wish that were possible. It would just tickle me pink to be able to bring that to you. But it doesn't exist because there's too many variables in the market. Too many traders at the table. Too many traders with their own reasons and ideas why they should buy and why they should sell. Some for the short term, some for the long term. Just too many variables. There's no book better than to help you sort all of that out than Trading in the Zone by my dearly departed friend. I still miss him, Mark Douglas. In that book, I had someone in a mentoring session the other day, and they told me, they said, you know what, I know it's not that I don't understand the setup. And as we walked through some trades, it became apparent that they were absolutely correct. They said it's the noise between my ears, and I've just got to figure out a way to separate my emotions from the trade. And that holds true for every trader. Probably the single most uttered phrase in the world of trading is, I was killing it in sim, and then when I went live, everything changed. Well, the markets didn't change. Indicators didn't change. Candles didn't change. The only thing that changes is your perception, because real money is on the line. And that's understandable. You're human. And all of us will have to figure out, even though you're a part of a community and you have people to turn to and mentoring and a shoulder to cry on and all these other kinds of things that, being part of a community, all of those benefits, there is a solitary walk, there's a part of the journey that each person has to figure out a way to sort out for themselves. how do I separate my emotions from the trade? How do I leave my emotions tied up out back when I go into trade so it doesn't interfere with my consistency? That's a deep question. Trading's not easy, but it can be simple. You got to figure out where your simple lies. Okay? All right. I hope to see you all in the workshop tonight. Again, if you have any questions, need any help, support at CFRN.net, 949-42 Emini, and feel free to email any questions ahead of time so we can kind of prepare for getting them answered for you. And especially if for some reason you can't make it, what we try to do is we try to cover all of the questions that were emailed in up front, especially if that person's not there, so that they don't have to go through, you know, the entire 2 hours, you know, wondering in suspense, gee, I wonder if my question is going to be the next one. So we try to get those out of the way up front, and then those who are present, we can get into dialogue over your question. Because if you're physically present, and I know sometimes that life just doesn't permit you to be, but if you can be, then when you ask the question or we look at a trade and Michael or I one gives you an answer, well, that gives you the opportunity to go, yeah, but, or yeah, but what if? And so then we can take it down, you know, we can peel as many layers off of the onion as you need us to until you go, ah, okay, I think I can do it. So, hope to see you there. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.